Alrighty, Alpha Hunters. Hope you are having a terrific Tuesday because the market is having a terrific Tuesday. Wow. Nobody saw this coming. um, I mean, what a move on the market. And we can take a look here at pre-market here on the SPY real quick. You can see basically when it happened was right when we got CPI, right? Right when we got CPI, we got the big pop. So, very strong move there. A lot of it was done pre-market. We did gap up. How much did we gap up? It was like 1.25%, I believe, here on the SPY. 1.4% on a gap up. I didn't really mean to click off of that. So, 1.4% to the open, and then we actually did trade higher. Got up to 2.16 higher on the day. Very nice. Very nice new move here on the market. Um, Not much else to really say about that. So CPI that we got this morning, that's what kind of drove the market market before it opened in the pre-market. So we got inflation to come in at 3.2%, which was down from the forecast. The forecast is expected to be at 3.3%. That is what drove the market this morning. And you got core inflation even coming down a little bit too. Also come down to 4%. Forecast is calling for that to be at 4.1%. Very, very, very good for the market. Really was. So we're gonna run through all the things. What is moving? All the things that are moving, and just take a look here at the daily. This is not the best spot to be bullish. I would definitely just say you need to at least wait. We need to wait a couple days, just see how some things set up. We were already pretty exhausted at the end of the day on Friday. Just be patient. Even if you are wanting to be bullish, all that. Just be patient. Be patient. We were pretty extended here over the previous 2 weeks. Huge gap up today. Not exactly the best spot to be bullish. Okay, just be patient. If you were wanting to get in bullish, you'll get a much better spot probably on a pullback here over the next few days, maybe next week or two. But yeah, looking pretty good. The other thing you want to be patient about is we get PPI and retail sales tomorrow. So PPI might undo everything that maybe we did today. Just be a little bit cautious as this is pretty largely overextended, and if it flips on the coin tomorrow, well, I mean, it can happen. So, and PPI is one that the Fed more closely watches anyways. So that might be a little bit more of a tell tomorrow. All right, so SPY looking pretty good. I mean, huge gap up, ran first hour and a half of the day, and then it's slowly giving it back a little bit here. What's kind of interesting here is the Q's a little bit of a gap up. I mean, it had a pretty good gap up, but it hasn't run as much during the day. It really hasn't. You can see just taking a look at the SPY and the Q's. SPY ran pretty good there for the first hour and a half. The Q's actually only went bullish for about an hour and 15 minutes. So a little bit less time there. And what's kind of interesting is you got lower highs here. Kind of talking about that switch yesterday because we were seeing one, divergence between the Qs and SPY between Friday and Monday highs, but we got one intraday this morning in that second hour of trading. So we'll see. I like seeing that kind of price action to be bearish or bullish on. Obviously, the bullish one you want to see like the market sell off, and you want to see the Qs make higher lows before the SPY kind of bottoms, right? You want to see the Qs make higher lows, SPY make lower lows. That would give you a pretty good indication to go bullish. So we've gotten two here back-to-back days. Obviously, we got an intraday one today, and we got a Friday, Monday highs between the Qs and SPY. There's a little bit of a divergence there. So it'd be kind of interesting to see what happens as we go into the rest of the week. IWM, though. Look at this thing. 4.75% on the day. It's a huge move. Almost a 3% gap. Actually, yeah, it's about a 3% gap up right there. So huge move there on the IWM. I would be willing to bet IWM has bottomed. Even if the market does roll over bearish in Q1 or whatever, I don't think the IWM takes out this low. It might have some struggle, whatever. It might pull back a good amount. I don't think it'll take out this low. And even if it does, it would be so short lived, it would be insignificant. Yeah, I dig it, man. I dig it. Sometimes just patient, right? You know, all throughout this period, we're just saying, be patient, wait for it to come down to here. This is going to be a great spot. I really thought it would get down, though. I really thought it would get down to this line right here, 159, because that's where we had some previous kind of tops right there. But all we really did was snag these lows from 2022, and then that was it. It was it's been pretty good ever since. So looking really good. I think that IWM is going to be a much better opportunity. Which, let me look here real quick. How's this? So the Q's IWM. Obviously, last week the IWM was getting wrecked last week, so it makes sense that the Q's IWM went a little bit higher. But you can see the IWM catching up pretty good today on this pair trade. I mean, I still dig this, and it looks like we're gonna throw in, so far halfway through the month. Looks like we're gonna throw a nice little upper wick there. We'll see. I mean, halfway through the month. I mean, that doesn't really mean anything. So we'll see how that goes. But yeah, you can just see, this is a weekly chart. You can just see last week the Qs just outperformed the IWM all week. So I'd be really interested to see how this ends for this week, because the IWM has already moved 4.5% today, and I couldn't imagine them continuing to move up as strong, you know, and so that would be what happens with the Qs. So, and we're going to take a look at some stocks, because there are some stocks out there that are, you know, big tech stocks not looking the best. DIA, nice gap up here on the DIA, the Dow Jones. Nice gap up as well. Yeah, kind of coming down from the highs. Okay, not a big deal. Get into a price level that obviously there would be some resistance here around 350. So okay, but you're getting above this 340 level. Obviously, the past 2 days traded up through it. Friday, Monday, obviously clearly gapping up above it today. So this is going to be very interesting. This one might take a while to set up, because if it comes down, you're going to get people to buy the dip. Like, people are going to buy the dip off this 340 level, 342, that kind of area. So if it comes down, people are going to try and buy the dip. So it'd be interesting to see if it kind of just chops sideways in here between 340, 350, and if it kind of does do that, then maybe you're looking bullish. But I would want to see how this thing sets up, maybe over the, you know, medium term here. If it breaks above 350, I think you're probably just picking it up on a pullback to 350, and then probably just going bullish. But I would want to see a pullback first, whether it's down to like 343, just kind of fill this gap, and then it goes higher. But that's just kind of my take on the DIA. But yeah, definitely getting through 340. That's a big time level. RSP also having a big day, up 2.66% here. Hey, look, intraday, looking pretty good. Nice gap up and ran. Looks a lot better than the Qs. Lot more aggressive. Let's see. So it did gap up 1.66% ish. And then it traded higher all the way up to 3.18%. Wow, that's a pretty good day there. So that just tells you all the other stocks, not big tech, really leading in the S&P 500 today. Because the Qs, especially since the market opened, the Qs really haven't had the intraday price action. So we're gonna check that out on sector rotation. Let's run through VIX. VIX is probably gonna be getting crushed pretty good, I'd imagine. Not horribly bad, but definitely down pretty good. Definitely snagged the low from Friday. So okay. So the VIX coming down pretty good there. See what happens tomorrow with PPI. So this is going to be the two areas that are really, really doing well for the market, for the stock market. Dollar is getting absolutely crushed off that news this morning. You can see here, 15-minute chart here, dropping off very sharply when we got CPI, and it's just continued to just drop off throughout the day. It's down 1.4%. It's a pretty monster move. The one caveat I will say, I mean, dollar just doesn't look good. I think we talked about that like last week or the week before, like with this breakdown that we did have back on November 3rd. Yeah, it just wasn't good. Just it did retest. I was a little concerning when we got Thursday's candle, but it just retested a little bit higher. But I mean, there you go. You get the follow through. Now, this level here, where it's getting into right now, I'm not gonna say it's gonna just straight bounce off of this, and then we're gonna continue to ride out here. I just think the dollar is done. I'm not saying it's going to go down to 100, but I mean that kind of a move. We had a breakdown, we had a retest, we had another breakdown, but we're coming into some pivot levels that it's probably going to respect in some time frame or another. I wouldn't want to just be outright bearish on the DXY here. I'd want to see something good set up. We got a pretty good setup last week into early part of this week, Monday. So that would be something you want to kind of see set up here. But yeah, it looks pretty good. Very nice breakdown there. It looks very good for equities. Gold then. So here's where, kind of been talking about with how bullish gold was during the month of October. It started to, as we got into November, even late, like really late October, it's gold GLD started really kind of underperforming, especially with some of those moves that the DXY was making, some of those big drop days. The DXY just, really dropping off, and gold wasn't as bullish, but that probably has a lot to do with it needs to kind of cool off from that huge move it had throughout the month of October. I would still expect GLD to probably come back down, retest a little bit lower. But I've mentioned this before. You get down to like 178. I think it's going to be more of a dip buy opportunity. 178 all the way down to probably, I'll say 174. I think those are going to be good dip buyers, probably to fill this gap, because once you break that, you're probably going to be coming down back down to this 168 level, but I don't think that happens. I really don't. I think you're gonna have some pretty good lows here. That's why I was saying just under that, maybe 174. These lows. I think you're looking pretty good here on gold. You're just gonna want a little bit further deep, a deeper pullback here, and then probably just gonna be in a buy zone. Jesus. All right, 10-year yield, man. All right. Very much looks like the dollar broke down pretty good from the Fed meeting on November 1st. So that Wednesday, Thursday, Friday definitely traded down. Looked like it was starting to base out here. But today on the 10-year yield, breaking below the lows that had kind of been put in over the past week, two weeks. Yeah, that's kind of a problem. So it basically seems like we're going to come at least down to the 4.3, 4.2 type area and check in with the highs that we had from a year ago. That clearly, it looks very positive that we do that. And then you can even make the case that maybe this is like a little bit of a head and shoulders kind of action. And now we're just breaking down that neckline maybe. So I would definitely expect the yields to probably drop off. Now, one thing that's kind of interesting on yields, I just saw this here on the front page of Finance Yahoo. I don't really care to look at news too much early in the live stream, but investors have never been this confident bond yields are headed lower. Okay, stop talking. It's distracting me. But her paused face is also distracting me. But what's interesting here is whenever you see this kind of talk here that investors have never been this confident about anything. Whatever comes after that, it's almost an omen of like go the other direction of whatever the article is talking about. So very, very interesting. So FMS percent expected lower long term rates. So I don't know if this is like a poll. I didn't really read the article. Maybe we'll read the article a little bit later on. But it's just, yeah, man, it's one that maybe, we see rates come down here over the medium term. And then, maybe over the next month to come check into the highs that we had last year. And then they kind of start to consolidate and push higher. Kind of like how they did, at the beginning of this year. And then they started pushing higher. Because, it happens. That's just kind of the way it goes. But we'll have to see. And see if it starts to consolidate in between like 4.2 to 5%, 4.5 or 4.2 to 4.5, and then maybe it pushes higher later on. Who knows? But we'll see. 10 and 2 inversion. It's kind of interesting. Even though the 10-year yield's down as much as it is today, the 10 and 2 inversion is actually up a little bit. So, the 2-year yield is dropping off even more than the 10-year, and there it is. It is dropping off pretty good. So if we start to see the 2-year really drop off here, yeah, we probably see that 10 and 2 inversion really start to spike up, and that's going to be the question: is does that indicate that there's some issue in the economy, and we're just going to see a short-term bump here on the stock market, and then we'll get the economic data down the line that indicates that the Fed. That the economy definitely has some issues. We'll see. We'll take it in strides. But for now, the market looks really good. Really, really bullish today. A bit extended, just really bullish though. HYG, high yield corporate bonds, a nice flag pattern. Talked about this yesterday. Would have been a really good day to be bullish on that. Obviously, hindsight's 2020, I guess. But nice move higher here on HYG, the high yield corporate bonds. These bonds between the LQD and TLT have been the ones that have held up the most since last October. They've held up the best. I guess not the most, but they've held up the best. LQD actually down from its open, so that's kind of interesting. TLT, how's the TLT doing? See, that's the thing, man. The TLT's also not moving all that much. It's up. It's up pretty good today, but it's down from its open, and it's like I don't know, man. That's just super weird. Maybe we're not done. Maybe we are just gonna consolidate here and then continue to push higher. But yeah, you can see the TLT, the LQD, just not as strong over the past year, kind of like the HYG has been. So let's check a look at that sector rotation for the day, because we're going to have some pretty good things to look at. So tech, probably going to be up pretty good with the gap. But I'm going to say without the gap, I'm going to imagine tech's probably not looking too good, because they weren't performing, or at least the Qs and AAPL wasn't performing all that great after the open. Are you going to load everything? Is that everything? Okay. So real estate, yes. I was talking with a buddy of mine this morning. We were kind of walking through doing a REIT position. So yeah, it makes sense. And that asset he was doing it on was up like 12.5%, I think, when we were looking at it. So it was crushing this morning. So yeah, real estate. And I would also, this is kind of the other thing I kind of told him. REITs are at a very, very attractive level. So I'm not going to say all of them, but a lot of them have been hit very hard over the past 2 years. And if you think yields and rates are going to be kind of coming down, REITs look really good. Really good. They've gotten hit. There's a lot of discounts out there. Utilities, discretionaries, materials. Okay, I like how like we have not pockets of sectors like grouped together on performance on the day. That's kind of man, we don't see it like that very often. That's kind of weird. And then kind of performing kind of in line with the market. We got industrials, financials, communications, and tech. Okay. We also got materials, healthcare, and energies underperforming. All right. So I'm gonna take out the gap and yeah, a little bit more scrambled eggs. So we got materials is leading the way. Utilities also outperforming pretty good. REITs intraday looking pretty good. Definitely REITs looking pretty good here over the past hour. Looking really solid. Industrials and discretionaries a little bit outperforming there. Financials underperforming just barely. Healthcare, tech, materials, energies, and communications. So that makes sense. Tech and communications. And as we go look through stocks, I'll kind of show you what I was what I was talking about. Um, but yeah, there we go. Sector rotation for the day, looking pretty solid there. So, all right, let's start by looking at big tech. Let's start by looking at the big 1 and 2. AAPL. So this is what I was talking about. This is why I was gonna say big tech ain't. It just wasn't looking good this morning. Like it everything gapped up. I'm not gonna say big tech didn't gap up. Everything gapped up. But I mean, it didn't have the run. It didn't have that run in the first hour and a half, like everything else did. I mean, you see Apple here just kind of went sideways, and AAPL's here only's up 1.3%. So it's kind of interesting. Now this is coming on the back of the previous 2.5 weeks or so of AAPL and Microsoft. Take a look at Microsoft, basically carrying the market. I mean, if you want to know what kind of carried the market over the previous couple of weeks, and here's the thing with Microsoft. They're down from their open. Like look at this move here on Microsoft. Now it's trading up at all time highs, and that's kind of going to be one of the issues that are do they see some downside here because there's starting to be a lot more things attractive in other areas. So yeah, but Microsoft nice gap up here today. Traded a little bit higher there initially, but I mean, it's definitely sold off a little bit more over the past couple hours than just about anything else. Only up 0.5%. Alphabet, gap up, kind of sideways, a little bit of a run there in the first 30 minutes. Yeah, mostly just kind of sideways, kind of just choppy. Had some runs, had some pullbacks throughout the day. Nothing crazy. What price level is this getting to? So, okay, so Alphabet has filled this gap. Well, oh my gosh, look at this. Let me kind of circle this. So we got a little bit of an island reversal here. Oh, I'm sorry, this is not an island reversal. This would be like abandoned baby. So we gapped down on earnings, and then we gapped up, obviously, on today, the CPI. So we got a little bit of an abandoned baby here over this time period. Is it perfect? No, because you can go back a little bit, back a couple months, and obviously we have some overlap, but it is there. Kind of interesting. Throwing a nice little upper wick so far on the daily. What about Meta? Meta kind of looks like Alphabet. Nice little upper wick. Meta hitting a new yearly high today. I believe them and Microsoft so far are the only ones that can really claim that. Okay, yeah. I don't think Google is close. Yeah, Google's not close. So Meta and Microsoft about the only two big tech so far making new yearly highs. Amazon as well also making new yearly highs today. Throwing an upper wick today. Popped there in the first 10 minutes and kind of has been fading back a little bit. All right. Definitely could see the market push. I'm going to go ahead and get rid of this because I thought we would come back and retest that. We might later on, but I thought we would do it sooner rather than later. Amazon, though. looking pretty good. Tesla. Um, so Tesla here, gap up, dropped initially, kind of just choppy, trending higher throughout the day. Yeah, I mean, it looks okay. Tesla looks like it probably is going to come fill in this gap here at about 240, 250, which is where its pre-earnings kind of gap fill level would be at. Okay. How semiconductors doing? Nvidia getting back up to its yearly highs. Looking pretty good there on Nvidia. Up 1.75%. Mostly a choppy day sideways. AMD had a push first hour of the day and has faded really ever since. Kind of at the daily lows right now. It has run pretty good from its earnings. Not a new yearly high for it. Okay. Intel, nice move higher. Oh my goodness. So this thing dropped really quick on the open and then got bought up. This looks like a very bullish pattern right here over the past couple of days. Looks very, very strong. Micron looking really strong. Yearly high for Micron. Okay. So Micron looking pretty good. Let's see who else out there. AVGO. AVGO is probably up at all-time highs. Yep, makes sense. They're gonna have earnings sometime soon in about 4 weeks. December 7th. Okay. When's Nvidia? So Nvidia's coming up next week, next Tuesday. Nvidia earnings. All right. So there's Nvidia earnings. What else is there? TXN up 2.5%. I'm trying to see if this got into the sweet spot. It did not. It did not quite get to 135. I still think you'd want to wait for 135. It hasn't gotten back over these lows here since it broke that down. So it to me it looks like it's kind of more consolidating. But the fact that you've gotten buyers from breaking that low, I would definitely be bullish on breaking this low that it put in late October from its earnings down to that 135 level. So 140 to 135 on TXN, you're definitely going to want to be snagging that. Looks pretty good there. Qualcomm, yep, gapping up today, up 2.4%. Kind of looking like it's rolling over here. All right, down from the open. Yeah, it's just a huge gap up. So this is kind of like, I was thinking about this. Is like, is this good or bad for the market? I guess that's kind of like the thing you can go both ways. You can go both ways. It's like, okay, I mean, like we're definitely continuing to push the trend. But the other thing is, it just seems like there's so much cash and liquidity still out there that it's like hard for the Fed to get control of it. And I think the market's reaction to just the CPI number coming down, 0.1% from the forecast, it just I don't know. It's I don't know. It just I'm not gonna say it's bullish. I'm not gonna say it's bearish. It's like, why are we up 2%? I mean, we've had inflation coming down, right, over the past year. We've had inflation coming down. Now, the two previous months of inflation data. August and September. It ticked higher, got up to 3.7. But it's nothing crazy. So I don't know, kind of interesting look on inflation, as maybe we do continue to push higher. Trying to look at some of these weeklies. I'm gonna look with MACD, see what they can kind of get us. So the MACD, the stochastics here are starting to really kind of turn up off the bottoms here. This is a weekly time frame. Monthly, what does a monthly kind of look like? Yeah. Okay. Monthly's so hard to give us anything. Moves so slow, but this daily, just look at how extended this daily is. Let's see, 2 hour, four. Here's a 4 hour. This is a 4 hour chart. I'm just trying to look at some different time frames here. Look at that move on the MACD. Look at that move. That is a monster move. That's higher than the highs that we put in back in July for the MACD. So, one day. Yeah, just a really interesting look. Oh, where are you at? There we go. All right, heat map. Makes sense. Everything's red. You can see the two big ones, Microsoft, Apple, AAPL, actually underperforming. Most of everything else, healthcare, yeah, underperforming there. But, that's all you need to know. It's like everything's green today. Oh, I didn't even look at... Yeah, I did look at Tesla. Never mind. I did look at Tesla. So, Home Depot, pretty strong day. They also had earnings today. Looking really good. It's a really good day there. Up 6%. Lowe's has earnings next week. Nice gap up on Lowe's. Looking pretty good. Nice little lower wick there. They were up 4.6%. Okay. I might check out that article on the live stream. Stocks surged after inflation cools in October. Yes, it does. I will not change my outlook. Fed rate cuts are likely soon, even without a U.S. recession. Here's why. Ooh. Please don't go to a paid website. Please give me the art. Oh, man. Let's see. Do we get it? No. May say it's still too early for him to talk about interest rate cuts, but almost everyone else is. Yeah, but... Okay, hold on. So, Fed Reserve Jerome Powell may say it's too early for him to talk about interest rate cuts, as Louis Vincent gave from Gavical Research put it in a note Tuesday. Rate hikes are likely tequila shots. One never knows when one's had enough until one's had too much. Goldman Sachs, which has been more optimistic about the economy than most, doesn't see rates dropping that far, but it still sees them getting below 4%. So that's the problem. Like, are they now saying that all the interest rate hikes are going to be the issue, and there will be issues in the economy for them to cut rates? Because they're not going to cut rates just to cut rates. I want to read. I want to check this out. See what. I don't track investor sentiment on bonds. Okay, investors have never been this confident that the path for bond yields is lower. New data from Bank of America showed on Tuesday. Bank of America's monthly fund manager survey showed some 80% of respondents see bond yields falling in 2024, the most ever captured by the firm. Wow, the big change. See bond yields falling in 2024. Okay, so over the next year, by the into the end of the year of 2024, so next 13 months. See bond yields falling. Okay, the big change in the November FMS was not the macro outlook, but rather the conviction in lower rates. But rather the conviction in lower inflation rates and yields. Bank of America's data analytics team, led by strategist Michael Hartnett, wrote on Tuesday. And should this conviction in lower bond yields in the year ahead materialize, it could serve as a catalyst for a stock market that has been challenged by rising yields. Yields, in our view, were the biggest challenge for this market. Truist co-investment officer, whatever, said, attributing to the S&P 500's longest winning streak in 2 years and a recent fall in yields. Okay. Yields have soared over the past several months, with the 10-year Treasury yield rising nearly 100 basis points from the start of August to mid-October, as fears of additional rate hikes by the Federal Reserve and a surprise increase in Treasury issuance spooked the fixed income market. But after a 10-year yield touched nearly 5% in October, bonds have caught a bid in recent weeks, as Fed commentary and the soft jobs reports have investors increasingly confident the central bank won't hike rates again. On Tuesday, after the release of the Bank of America survey, the latest consumer price index report showed prices increasing at the slowest pace in 2 years, which markets viewed as a welcome sign for the Fed. Yields fell even further early Tuesday, with the 10-year yield falling more than 18 basis points to 4.4%. If the intraday move holds, it would mark the biggest move in the bond market since investors sought the traditional flight to safety trade amid the regional banking crisis in March. Also noteworthy, the Bank of America survey was an overall optimistic tone from market participants. Investors now see 76% chance the Fed is done hiking, which is the most conviction investors have been that the central bank hikes are ending since the question was first asked in May. Investors are also now overweight equities for the first time since April of 2022. Worries about inflation in central banks is rapidly diminishing. Wow. So that's the concern one. Investors are now overweight equities. So I don't know, and this is so weird because I mean, people were talking. Shoot, I'm gonna have to go back to the SPY. I remember people talking back in like May that, hey, when we get to the July meeting, it'll probably just be one more, right? Because they held in May, they raised in July, they held September, they held November, and so I'm just like, I mean, I thought we already knew all this. That's the, I don't know. This, I mean, it's super weird. I didn't see like anything that we didn't already know. Like, if you already thought the Fed, Vincent, what's going on, man? This is crazy. This is not crazy. It's perfectly logical. I just didn't see why it would be I'm just trying to also look back, like, what's today, November 14th. Also look at like, because March is going to be way different because we had other issues kind of going on. Like May, so Because all right, so and like that's what I'm trying to look at. Like, what was the most bullish day we had on CPI? Right, on CPI day, because we've had massive drops in inflation over the past year. Right, we've had massive drops in inflation. Okay, but why today? Why today's inflation report is it like the most bullish thing ever? Like I've already thought like everybody was talking about okay, the Fed's done, they're not doing it anymore. Then why does it make a big deal today? It just feels like the market is overextended to the upside. Yeah, I would agree. Like if you're wanting to get in bullish, today is not the day to do it, Ray. I would agree with you. I absolutely agree with you. I would definitely be waiting for a pullback, whether it happens the rest of this week or over the next 2 weeks, whatever. I would definitely be waiting. I got killed on Friday, AMD on Friday. Oh yeah, you got killed on that day. Yeah, I'd imagine a lot of people got killed on Friday because I mean, who saw that coming? Like, who just saw that coming? I don't know, man. I just feel like there's a lot of there's a lot of money still out there, and I think if they try to reduce rates and we're going to see that, right? We're going to see yields. We're going to see yields drop. I'm sure we're seeing pretty good long term yields drop. And if we continue to see that, then um, oh man, look at that 30 year actually just snagging the lows. Like it, the 30 year hasn't really even gotten below the lows of last week. Really, I mean it snagged them, but it didn't really get hugely below them. But very interesting that if we see lower yields, mortgage rates come down, people start buying homes again. I mean, does core inflation start to tick up again? So it's I don't know, man. And it was kind of funny. Like we saw that article, that report that came in from the first week in November when we had the 30 year drop off to end that week, 3 days, very strong drop off. But we saw that there was a report that came out the following week that there was an uptick from the interest rates dropping for mortgage applications. So mortgage applications ticked up that week because the drop in yields, long term yields. Vincent, you said money managers out of position trying to make up their bad year. Yeah, I mean they're gonna make up. Yeah, they're in a position now, but it's like yeah. I mean, and that's why that is. I'll be pretty honest. That in a nutshell is the biggest reason why I never went into professional money management because it's not about making money. It is. I'm not gonna say it isn't. It is about making money, but when you have to report to somebody your periodic reports, whether they're quarterly or annually, it kind of limits you on like because you have to appear like you're participating, right? You have to do it. You have to appear like you're participating, and that whether you agree with the market run or not, it's is indifferent. So, yeah, definitely a strong move today. That's why I think I'm just glad sitting here, man. I'm just glad sitting on my hands. I don't mind waiting. AMAT. Let's check out AMAT. How's AMAT and LRCX? Very strong move on AMAT. But it's like our investors now for the month of November and December, are they buying in because they think interest rates are coming down, or are they buying in and going to buy in because they have to have certain assets in house for reports at the year end. And most years, I would say it's because they have to have reports look a certain way, or investors ask questions. Or I'm sorry, their clients ask questions. And I would rather have short-term losses and no questions rather than have no losses just kind of sitting there and people asking questions. I don't want to have to deal with, and that's the whole client relationship thing. Like, I don't want to deal with client relations, man. LRCX looking pretty good. Cat, how's Cat doing? Cat looking pretty good. Definitely a nice drop on earnings. Deer's slowly been fading back, up 1.8% today. All right, not bad there on Deer. Let me know if there's anything you guys want to look at. I'm gonna be curious to see what it looks like when we pull back. I'd be curious to see what we get on PPI tomorrow, because if PPI comes in a little aggressive, then yeah, that'd be an interesting one. Jesus. Like, if this thing ticks back higher, I guess what would the market reaction be? I mean, we wouldn't sell down 2%, like we're up 2% today. And this is the one that the Fed mostly watches. Right? So June it ticked higher. July ticked higher, August ticked higher, and it came down in September. And so if you look at CPI, which it's almost like this leads CPI by like a month. Yeah, it looks like it kind of leads CPI by like a month, maybe two. Because July CPI moved higher, August higher, September flat, and then October just came down. And that was kind of like a little bit of like a month delay. Yeah, so September it came down. So that'd be interesting. Like, if we get PPI higher, maybe like a 0.8 reading. I'm not saying that would happen. Was that like a foretelling of next month we get CPI to tick higher? I don't know. It's just interesting reaction today on the market, because we didn't get below the what was it? What was it, like the June CPI number? We didn't get below that. Like, this is by far like one of the most bullish days of the year, and we've had a lot of them over the past like 2.5 weeks now. We had a pretty good one back on November 1st. We had a pretty good one on November 2nd. We had a pretty good one there on November 3rd. We had a pretty good one on Friday. And then we're up 2% today. But it's like, do we get a lot of new information today? I don't know. I didn't feel like we did. So, oops, there we go. Let me know if there's anything you want to look at. Other than that, I think I'm good. I'm be curious to see how the market kind of goes here for the next couple of days, because I feel like we were pretty extended in and out last week, and obviously yesterday. So today, huge gap up. Tech was kind of lackluster early on. Seems like we're running pretty good here over the past hour, over the past 40 minutes or so. Looking pretty good. Definitely there on the SPY as well. So, take a look there at 1 minute. So yeah, it looks pretty solid there for the day. So we'll see what happens tomorrow. PPI, maybe we'll see the market react to it. I have a hard belief that I don't know if we would react positively if PPI came down. I wouldn't see something like this happening again. So, Alpha Funders, have a great rest of your day and take care.